Welcome, everyone. We appreciate you taking the time to join us for today's webinar, an introduction to Alumni Ventures Seed Fund. We are certainly looking forward to our presentation today, and with a large group joining us for this session, I'm going to give folks just a moment to get logged in and settled before we get started. All right, let's jump in. So my name is Hillary Nakala. I am Senior Vice President of Investor Relations here at Alumni Ventures, and we are excited to be leading this webinar today. So before diving in, I will start by reviewing a few legal disclosures. So today we are speaking about Alumni Ventures and our views of the associated landscape. This presentation is for informational purposes only and is not an offer to buy or sell securities, which are only made pursuant to the formal offering documents for the fund. Please review important disclosures in the materials provided for the webinar, which you can access at av-funds.com/disclosures. All right, and a few quick housekeeping items. So for those of us joining today, you will not be on camera and you will be muted throughout the entire presentation. So wherever you are dialed in from or attending from, we cannot hear you or see you. And we will record this webinar and we'll share it out with you after the event. So today we're going to hear from our seed fund investment team. And we really encourage you to submit questions throughout this session as they come up for you. So we'll be answering a few of those questions a little bit later in the session. Please enter them in the question section of your GoToWebinar control panel and click submit. So Jeff, one of our investor relations team member, is supporting us behind the scenes. Thank you, Jeff. And he'll help us field your questions as they come in. But if we don't get to your specific questions today, our team will follow up with you via email after our session. So to learn more about Alumni Ventures and investing in our venture capital funds, I encourage you to book a call with one of our senior partners. They would welcome the opportunity to speak with you directly. And Jeff has actually put a link into the webinar chat where you can book a convenient time to connect with our team one-on-one. Jeff also has included a link in the chat to our secure data room for the seed fund. You can explore all of the fund materials there, performance information, fund documents, and then you can begin the process of investing with Alumni Ventures. Jeff, next slide. So before we go through the agenda and share what to expect during today's session, we'll take a moment to have our seed fund investment team members introduce themselves and share a bit about their backgrounds. So we'll go right in order across the screen here. So Ron, I'll have you introduce yourself.
Great, thanks Hillary. Hi everyone, thank you for joining today. Great to speak with you all. My name is Ron Levin, I'm managing partner for the seed fund here at Alumni Ventures. I've been at AV for going on about 4.5 years now. Previously worked on the Yard Ventures Fund, our fund for the Harvard alumni community. But my story with AV actually goes back even before that. I was a fairly early investor in one of the AV funds myself, Yard Ventures, back in Fund 2 quite a few years ago now. And I liked the product so much that I got to know the team and got to know the strategy of what AV was offering through the funds. Thought it was something interesting, unique, different, and more importantly, value creating for my own investment portfolio, and decided to take an opportunity to come and work here. So that's kind of been my journey here at AV, and this year took on the role of leading our seed investment activity. Prior to AV, I was a founder myself, so I've been on the other side of the table. Have raised venture, was co-founder and the first CEO of a company based in Barcelona called TravelPerk, an enterprise travel management platform that has actually gone on to become a unicorn now with a couple thousand people. So have kind of worn both the entrepreneurial hat as well as the startup and investor hat, both personally angel investing and now professionally as a VC. Most of my background has been a combination of the travel and technology industries and specifically travel technology. But I've gone all the way back to the early .com wave, started my career at a company called Lycos that some of you who've been around a little while might remember was kind of one of the pre-Google search engine and portals. So I've been around .com land and startups and tech for a long time. Excited every day to meet great founders and hear about amazing innovations. So that keeps me motivated and enjoying coming to work every day. I will also note will also raise my hand that I'm now a published author. So I've recently published a book called Higher Purpose Venture Capital, which talks about some impact-driven early stage venture-backed startups. So that's just come out as well. But without further ado, I think I'll turn it over to Mira to introduce herself.
Thanks, Ron. And I love the customer turned team member story. It's hard to beat that narrative. No, but thanks so much for the intro. And yeah, prior to jumping into venture with Alumni Ventures, I started my career at Yale University, actually. So I started my work on the finance side, working closely with the endowment side of the house, and after a few years moved into a strategy biz ops role for the university. And so that meant everything from doing M&A for the university, launching new schools, securing corporate partnerships, and culminated with leading an ERP implementation for the university. So getting my hands dirty in enterprise go-to-market and seeing really B2B SaaS disrupt a legacy organization like Yale. And honestly, that's sort of what sparked my interest in doing a bit of a pendulum swing from a big sort of organization like Yale to sort of early stage startups. And through business school at Tuck, I joined Alumni Ventures shortly after, and I've been working with sort of the earliest stage founders. And so with Alumni Ventures, of course, we're generalists, but have a tendency to focus on B2B SaaS infrastructure and developer tooling. But it's a pleasure to work with Brittany and Ron. So I'll hand it off to Brittany now.
Awesome. Thanks, Mira, so much. I'm Brittany Wade. I am a senior associate here on the AVC team. I joined about a month ago, but my background has largely been in the product space, both at the startup and enterprise level. I first rolled out installments and buy now, pay later products at MasterCard across all their global cards, and then later, most recently, worked at a Series D startup called Trove and built out a circular economy startup as well. Prior to that, I earned my BA at Columbia, and then most recently earned my MBA at Dartmouth as well, similar to Mira. And with that, I'll pass it back to Hillary.
Wonderful. Thank you, Brittany. So as mentioned, my name is Hillary Nakala. I am our Senior Vice President of Investor Relations here at Alumni Ventures. And my background is primarily focused on building customer experience and service-focused programs at prior organizations. I'm also out of financial services, having previously worked in retirement investment planning. And I joined Alumni Ventures back in 2016, so I'm coming up on 7 years with the firm now. And when I joined, we were a startup of about less than 20 employees at that time. And we had just launched the third vintage of our first alumni-focused fund for the Dartmouth Community Green D, and had just launched our first fund for the communities of Yale, MIT, and Harvard. So to give you a sense of growth and scale for the organization over the last 7 years, we now offer more than 40 funds. We have offices across the US in Boston, New York, Chicago, Austin, Texas, Menlo Park, California, and then our headquarters office is located in southern New Hampshire. And we've raised over 1.2 billion in capital, and we've proudly backed more than 1,200 unique portfolio companies that we've invested in. We have about 150 Alumni Ventures employees, with about 50 of those being investment professionals. And as an organization, we set out to democratize VC so that more individuals can further diversify their investments and adding venture capital to their portfolio. So I'm excited to get started talking about our seed fund. So we will share our agenda and really kind of jump in here. So Jeff, if we can go to the next slide, please. All right. So we're going to start with why investors should consider adding venture capital allocation to their portfolio. And we'll review AV's model for building professional grade diversified portfolios. We will learn more about Alumni Ventures Seed Fund, focusing on companies raising pre-seed and seed rounds. And then we'll discuss the process of becoming an investor with AV. And then we'll wrap with Q&A. So again, as you have questions that come up throughout the presentation, please be sure to enter those in the questions section of your GoToWebinar control panel. And with that, Ron, I will pass it off to you to begin sharing about our AV seed fund thesis.
Great, thank you, Hillary. So the AV seed fund, as Hillary mentioned, is one of a number of different funds within our group. We sort of operate as one organization managing multiple different funds, sort of like a mutual fund family of venture capital. Like to think we're kind of the first and leading firm that's actually doing that. But today, we're talking about the seed fund, which is the area that we focus on. We're building a portfolio that is specifically focused on the early stages of venture creation. So seed means just that, seed, but it can also be a little bit unclear what exactly is meant by seed. We are investing in very young companies, sort of at the cutting edge of innovation, early days, so valuations are still low and upside is still very high. Everyone sort of realizes that early stage seed investing is not without risk. Not every company will succeed. But the idea here is sort of what's called in venture parlance the power law. If you get in early enough and build a big portfolio, the returns on some of these investments have the potential of being so great that they more than cover any losses that you may experience or companies that sort of muddle along but don't really have a breakout. And that's actually what happens if investors are able to build a well-diversified early-stage venture portfolio. Traditionally, they've been able to recognize some pretty attractive returns, something on the order of 22%, based on independent research of average annual returns, kind of from seed stage investing. So what we've seen in the last year, obviously the market has had a bit of a rocky past year or two. Since basically the first quarter or so of 2021. But in seed investing, actually, we found that this has presented some very compelling opportunities because valuations have remained attractive and in some cases become more attractive. But there's still a good amount of deal flow. There's still no shortage of interesting ideas, opportunities, emerging technologies, and great founders out there pursuing ideas. So we are really trying to find these great opportunities at an early stage. I will add that seed investing does not necessarily mean the very beginning of a company. A couple of people kind of in the garage, working out an idea. There are occasions where we may get in very early like that. Maybe a case where the founders have such an incredible track record of prior startup success that you can pretty much bet on the person alone. But in most cases, there is actually something more than that at the seed level. In funding rounds, there are actually pre-seed as another term, or angel and friends and family. So there's sort of different variations on what is actually seed. But in general, we're looking at early companies that may have already built a product, or at least an initial go-to-market version of a product, or a beta, or what's called an MVP, minimally viable product. In some cases, they've been tested with customers. In other cases, they're actually generating recurring revenue. But that may depend as well on the particular industry. If it's a biotech or life sciences deal, that can take years and years before a company goes to market. But it's still possible to get in early in the product development life cycle. So seed can encompass a lot of different areas, but relatively speaking, it's still very early. And this is sort of prior to thinking about, okay, they've proven the model, now it's growth time. This is really like an idea with something to indicate that there's an opportunity to scale this model, and then it can become very financially attractive for an investor. So the reason to kind of invest in a whole fund is you're not getting simply 1 or 2 or 3 companies, even as one might do if they were angel investing. You're really getting a whole broad portfolio. We'll put together a portfolio over the coming year to 18 months of roughly 20, 25 companies that will be well diversified across different sectors. We'll cover enterprise SaaS, most likely, consumer, some hard tech and deep tech, some life sciences. We don't have specific targets on any one particular area, but from experience, we know that we do a pretty good job of finding deals across many different sectors, but all coming in at the same stage. And this sort of portfolio approach is what is known to lead to the best possible potential outcomes of a portfolio return. So I think we can go to the next slide, please. So we are already managing the money of over 9,000 individuals who've decided to make venture capital part of their portfolio. It's not typical for an investor to put half or more of their portfolio necessarily into venture capital, but as part of a well-rounded, diversified portfolio, it can be quite attractive, which is how I mentioned at the beginning. I got involved myself with alumni looking to diversify my own portfolio. And there's good reason for doing it. Over various time periods, alumni venture funds, for example, have returned around 15% since the 2020 period, which compares to closer to 10, 11% on the S&P and a little bit less on the Russell. So this is a market that in principle should outperform public equities and has been what's happened historically. No guarantees of future results, of course, but from historical evidence, this is what we found, that the IRR on this asset class can outperform public markets. There's some reasons for that because of this kind of power law that I alluded to. But one has to accept that this is an illiquid investment until the companies begin to liquidate, either be sold or go public. So there's no free lunch, as they say. So you have to be willing to live with that lack of liquidity on this investment, which is why it's not necessarily a good idea to put too much of your investment portfolio into this asset class, but certainly the assets that you feel are meant to be invested for the long term in order to seek hopefully what will be a higher return once the liquidity does come, whether it's 3, 5, 7, or even 10 years down the road. Alumni Ventures is the most active venture capital firm in the US, as ranked in 2022 by PitchBook, which keeps close track of these things. We have invested in hundreds of companies per year, both initial investments and follow-ons. So our model is to co-invest alongside major leading venture capital firms, the kind of brand name firms you might know, and really trying to democratize venture capital, making this asset available to an individual accredited investor. Since most venture capital firms are sort of off limits if you're not an endowment, a pension fund, or have really millions of dollars to invest into a single fund. We make it accessible to a much larger audience of investors. We've raised about 1.2 billion to date, invested in close to 1,100 or 1,200 even portfolio companies at this point. And as Hillary mentioned, we're over 50 investors spread across 6 different offices around the country. Continue. So we are, as I said, of course, as the largest venture investor in the country, we are certainly the largest venture firm for individuals. That's really been our mission from the start. We're really one of the first venture shops if not the first, to go out and specifically say we're not going to raise money from endowments and pensions and corporations, but instead from individuals. And in doing so, we're democratizing venture capital as an asset class, but also bringing together communities of individuals. We started with a fund for the Dartmouth community, Green D Ventures, expanded it well beyond that now to many other alumni groups, as well as other targeted or what we call focused funds that focus in particular sectors or stages of investing, such as the seed fund. And this has been really, I think, our competitive strength above all else. The number of people that have joined our group, and not just those that have been able to invest with us, but over 600,000 people actually have opted in to subscribe to our newsletters, follow what we're doing, and have raised their hand to be helpful to our portfolio companies. One question is why would an exciting founder want to take our money alongside of maybe a big brand name venture capital firm? It's really the power of our community, the ability to tap into not just the alumni networks of top universities, but all sorts of other individuals that have a high interest level in early stage startups and technology who can be helpful. And we have a dedicated team, actually, our platform CEO services team, that helps facilitate introductions to customers, to partners, to experts, to talent, and a whole number of other ways that we serve our portfolio companies, which are complementary and often a bit different from what a lead investor might do. And this is why CEOs are generally excited to have us on board, and why we're able to get access to some of the best deals out there. We'll talk more about the seed fund with Mira, but I think next we'll go to Brittany to talk a bit about how we source, and specifically how we source through some of our angel partners.
Great, thanks, Ron. Awesome. So one of the things that we do here as a part of our seed team is our new initiative that launched earlier this year called our Super Angel Partner Program. And essentially, this is just one of the many ways in which we source deals, but we've had a lot of success with the program already. Essentially, we partner with successful and experienced angel investors to source really compelling early stage opportunities. Our often target is pre-Series A companies, so a lot of pre-seed, seed extensions, bridge rounds is really our bread and butter here. With really incredible founders leading the companies, really compelling technology, and serving large markets, we're really looking for moonshot opportunities oftentimes in these cases. And since starting this program in early 2023, we've signed about 40 super angel partners and have completed over 30 investments they've referred to us. And these investments have kind of spanned across multiple sectors. As Ron mentioned before, we are very sector agnostic, but they've been largely within the fintech, SaaS, and obviously with AI being so hot these days, a lot in the AI space as well, but also leaning in on digital health, biotech, DevOps, and other areas as well. In terms of the geographic scope of these investments, we are market agnostic and we do source all across the globe, but largely our geographies have been in North America, Europe, and Latin America. But again, we're actively seeking across the globe, with investments also coming in through Africa, as well as all the other markets in the world as well. Next slide. Thanks, Jeff. And this is just a snapshot of some of our super angel partners, of which, again, there are about 40 of them. This is just a small group, and as you can see here, they come from a diverse background, leading companies of their own, different experts in different fields, but all of them have provided us with really quality deal flow thus far, and we're really looking to double down on this program in the future and continue to expand this program as we think about our sourcing strategy. And obviously, this has been a very successful part of that as well. So with that, I will pass it over to Mira to speak more about the specifics of our seed fund.
Awesome. Thank you, Brittany. And yeah, I know Ron mentioned this early on, but I think, before we jump into AVC, maybe we just spend a minute talking about what seed, truly is. And, as he mentioned, seed really represents one of the first times a company will seek out institutional capital. And that means, from a traction perspective, these companies could range from simply having, a minimum viable product and just starting their sales motion, all the way to companies that have been in market for months or years and have several $100,000s worth of revenue. It's really purely based on the time that they want to come to market and, raise capital. And so we've invested in and companies that fall across that spectrum, which is really exciting, and it's sort of risk adjusted as well. But in that vein, AV Seed is really sourcing, between 50 and 100 companies over a year and a half time frame. It's diversified by sector, geo, and lead investors. And we actively secure these pro rata rights so we can utilize our reserves and chase our winners. And that's kind of the intentional part of the seed team here. We like to invest early alongside founders at low valuations so we can grow our ownership as the company grows as well, as they gain market share. So it's really advantageous for everyone. And with a minimum sort of investment of about $10,000, you can not only participate in the fund's growth, but also gain access to our syndication offerings, which I'll go into a little bit later. So you can go to the next slide. We can talk about diversification a little bit. Awesome. So, although we are a stage-specific fund that focuses on seed, we seek out diversification just like other alumni funds that span sector and geo. So of course we sort of capture the gamut here, as you can see, but our team is also sort of reflects some of that diversification as well. Ron and Brittany are based out on the East Coast. I'm based out on the West Coast. And so there are natural sectors that really we can sort of naturally source in based on where we're located. And then tying in the Super Angel program, which I know Brittany went into, we have angels who have this unique ability to expand our footprint just beyond our team, because these are individuals who are experts in their own respective fields, and they're not purely based in Silicon Valley, New York, Boston hubs, because there's always companies starting everywhere. So we think the Super Angel program is a real strength here. And the other thing I'll add here is, our diversification parameters capture market sentiment. So it generally matches the spread of pitch book. So for example, as I think Brittany mentioned, unsurprisingly, we've increased our focus a little bit more on AI and ML in the past year and a half or so. And that really matches, where companies are created, and we want to make sure that we're sort of keeping pace with that innovation. So we can go to the next slide. Awesome. So we co-invest with established sort of venture investors. So in addition to independently sourcing exceptional companies, we also spend a lot of time building relationships with exceptional institutional funds in the ecosystem. So as a result, we have made a number of investments, as you can see here, alongside these funds and more. And we do this on principle and in a very intentional manner. Institutional funds like Andreessen, they bring targeted expertise to management teams. There's a partner that has a very clear track record in the go-to-market or in the customer profile that a particular company is serving. And to Ron's point, with our community, we feel that we just accelerate the company's growth by really adding a bit of horsepower behind the lead to sort of say, through our network, through our investor community, we have the ability to sort of, give companies a few more arrows in their quiver, so to speak, with our immense network. And I actually saw this in action recently with a stealth company we just invested in alongside Andreessen, which is in the workflow productivity space. Through our really strong relationships with the management team, as well as the lead partner at Andreessen, we were able to secure allocation in an oversubscribed round. And that collaboration with such a strong institutional VC based in Silicon Valley really allowed us to, again, partner at once and then continue that partnership over sort of our relationship. So it really excited to see that company take off and excited to see more partnerships with great funds like these. So if we can move on to the next one, that'd be great. Awesome. So I won't belabor this point, but it is really important. Once we've identified a really promising company, we bring each deal through a 3-step scoring process to ensure that we've really conducted a very rigorous diligence process. When sourcing a deal or building conviction, it becomes quite natural to sort of become a little biased or to fall in love with the company that you bring in. So this multi-step process just allows our team to really mitigate that risk and to ensure that we are not only moving quickly on these really exciting companies, but moving in a really robust, rigorous way as well. And we've sort of uncovered, all aspects of the diligence process, and it's made us really effective in market. So it's exciting to see that here. Maybe we can move on to the next slide. That'd be great. Awesome. So candidly, there are just way too many exciting companies to count in our portfolio. And so even the thought of putting this slide together was really challenging because, they're like all of our children. There's no favorite company, but we're really proud of our portfolio and the success of our companies that we've been able to invest in over the past few years. And I won't go into all of these companies, but perhaps highlight one just so you have a sense of how do we find these deals? How do we diligence them? How do we sell our way into promising startups? So for brevity's sake, I'll focus on Latitude for now. And Latitude, maybe I dial back on the problem first. In the US, many of us are based in the US, the logistics of starting a company have been solved for the most part. Many US-based companies utilize Stripe Atlas for company formation. They think about Mercury for business banking, or Ramp or Brex for corporate cards, Carta for cap table management, Gusto for HR, and the list goes on, right? This is a pretty robust infrastructure that we have here. And despite that, in Latin America, it's seen, $15 billion worth of venture capital funding just in 2021, which was really a record year. The infrastructure stack in LATAM leaves much to be desired. Founders are still finding that they have to piece together different solutions just to start a company, which is a real shame given sort of the promise there. So Latitude was founded by a team of former founders and builders, and they essentially created a suite of solutions to address and provide solutions for these big friction points for early stage entrepreneurs. So it addresses everything from company formation to the right infrastructure to secure international capital, cap table management, and access to world-class mentorship from tech leaders and operators. So we were really excited to secure allocation here, especially when funds like Andreessen Horowitz and NFX stepped in to lead the company's seed round. And going back to our thesis around investing behind really strong leads, these two funds in particular have expertise in fintech, in marketplaces, and in LATAM. So when we reached out to the Latitude team, we really made the case for our network connectivity to say that we are really ready to amplify and accelerate your sort of your adoption within LATAM, broadly speaking. So we were thrilled to secure allocation there and excited to see that company thrive. And love to switch to the next slide so we can talk about syndications for a little bit. Awesome. So syndications offer, our investors even more intimate access with some of these promising companies that I just went through. As investments are sourced and sponsored by, our funds, investors have the opportunity to personalize their portfolio and really lean into investments that make sense for them. And one promising syndication opportunity that we actually made available a little while ago was Rawazi, which is essentially building a Nielsen or Kantar for Africa and Asia. So it collects consumer insights and sells that data to Fortune 500 companies that are based in the US. And that's a really meaningful data channel because a lot of these Fortune 5s are thinking about market entry, they're thinking about pricing, they're thinking about product placement in these emerging economies. So it was a really promising company to back. And just to sort of highlight a data point that speaks to how quickly this company was moving, just in the time that we ran the syndication, the company actually increased their revenue by 25% in that span of time. So we were really thrilled to invest in this company as a fund, but also give our investors an opportunity to invest alongside us. So from there, I will pause on seed and I'll hand it back to Hillary so she can take us through the nuts and bolts of how to invest.
Excellent. Thank you to Ron and Brittany and Mira for each sharing more about our AV Seed Fund. It's really incredible to dive deeper into the opportunity that the seed fund provides investors, especially given the potential value creation when investing this early on in innovative companies. So thank you all very much. So we'll ask Ron, Mira, and Brittany to stay on camera with us as we switch gears and move over into Q&A shortly. But before that, I'd like to take a moment to kind of go through the process of becoming an investor with us. So our goal is to make the investment process as seamless as possible. It encompasses 4 steps, all of which can be completed right online through our Alumni Ventures investor portal. So once you've created your portal or logged into your existing portal, you can select how you'd like to hold your investment, and you'll be prompted to electronically sign your subscription agreement. So investors have the option to invest with us individually, directly under their name, or through a trust or entity, or by using retirement funds. And then if you're a non-US investor, for those that are not located in the US or don't wish to use a US tax ID, we do offer an offshore vehicle that can be used to invest in our funds as well. But for those that are interested in investing through an IRA, leveraging retirement funds, it's actually about a third of our investors at this point that choose to do so. Our investor relations team would be happy to assist through that process and provide all of the necessary information related to retirement investing. So if that's something that is of interest to you and you'd like to take a look at some materials now, Jeff, if you can share the retirement investing overview document in the chat. Jeff will make that available so that you can click in and take a look. But in terms of process, once your subscription agreement is electronically signed, you'll be prompted to demonstrate your status as an accredited investor. So we do partner with a company called Parallel Markets to offer a free accreditation check. And interestingly enough, Parallel Markets was actually a company we invested in our second vintage of the seed fund. And we're really proud to be partnering with them on accreditation. So it's really cool when that kind of comes full circle. All right, so from there, once your agreement is signed and you have demonstrated your status as an accredited investor, the final step is the funding of your investment, which you can do via ACH, wire, or check. So once your investment is complete, all investors have access to their portfolio through our online investor portal, where you can also access semi-annual reports, your annual K-1 tax documents, updates about your portfolio companies, and more. And then throughout the entire investment process, of course, our investor relations team is always there to assist with any questions. So please don't hesitate to reach out to them if you need anything at all from our team. Thank you, everyone. We appreciate you. Thanks for joining our session. We hope to have you join our seed fund, and we'll be in touch to share a recording of today's webinar. So please reach out with any questions. Have a great rest of the day. Thank you.